Hello and welcome to another episode of the Uranium Market Minute. Today is Monday, February 7th, and this is episode number 75. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. Before we get into anything, any content today, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, so I am not going to be in the office for most of this week. I'm going to be out doing a due diligence trip for a company that we follow and doing some boots on the ground work. That will be Tuesday through Thursday. So we will do a video today. We'll do another podcast on Friday. That will be, let's see, 7, 8, 9, 10, the 11th. So I apologize for being out for a bulk of this week, but we're here today. We'll be here Friday. And of course, we'll be following everything, just won't be available to do the podcast. Hope everybody had a great weekend. I had a really nice weekend. It was my birthday on Saturday. Enjoyed some tree planting, which is something I've always wanted to do on my birthday. And I appreciate all the kind comments on Twitter for the tweet that I shared on Saturday. So thank you for that. And looking like so far so good this week in uranium. We've got a big event in the uranium space, which if you've only been following uranium for a few months, then will be new to you. Every 3 months, we'll have a quarterly conference call from Cameco. This is an event that everyone in the industry, all the investing community, all of the funds, all the analysts, they all pay very close attention to these conference calls. And a lot of times these calls can set the tone for the following days, weeks, and sometimes even months, depending on what is shared in that conference call. So that will be this coming Wednesday. I believe it is 90 minutes before the open of the market. So wherever you live in the world, 90 minutes before the opening of the American markets. So that will be 5 a.m. my time in the Pacific. Which is always fun to wake up for. So that's coming this coming Wednesday. And the market, I'm sure, is waiting on a number of elements, not only for some clues as to what they're seeing in terms of the long-term uranium market, long-term contracting market. A lot of the market actually gets much of their understanding of the term market from these conference calls, because there's so much shrouded in mystery in terms of the NDAs that are signed, the non-disclosure agreements for these contracts. So that's one thing. We'll be waiting to see if they mention anything about McArthur River. They have stated in previous conference calls for the past few years at this point that that mine is not coming back online until they have those pounds spoken for, and they have a home for the pounds, meaning they have the future production, at least a bulk of the future production of that mine secured in long-term contracts, at least enough sufficient to justify the reopening of the mine. So we'll be curious to see if they mention anything about McArthur going forward. But I'm going to talk a little bit about the URA rebalance, which finished up today in the mailbag section. And so let's just blow through the scoreboard here. We'll take a look at the charts across the sector and get to some details on the URA rebalance. So the spot price uranium, $43 a pound mid-market, up slightly from last week, stabilizing a bit after being knocked down at the end of January, as we all expected. Overall, very stable here. Still looking at decent volumes in the spot market in terms of trading, although the end user demand is really what is lacking in the spot market currently. With that said, SPUT did buy 200,000 pounds on Friday. They raised 500,000 new capital. SPUT traded up above that 1% premium to NAV for a brief moment on Friday. So despite the record volume in the trust on Friday, almost all of that was below that 1% premium to NAV threshold that they need to issue shares into the open market through their ATM and raise money. So they only raised 500K, purchased 200,000 pounds. So their year-to-date total, they've purchased 3 million pounds this year so far, and we are 5 weeks into the year. So not that we are annualizing this, but hypothetically, if we were, and not that we are, but if we were, we're looking at 31.5 million pounds for the year purchased by SPUT. By the way, even though SPUT did take great advantage of that one crazy trading day with the initial news coming out of Kazakhstan with the unrest, and they raised a lot of money that day, they have been nibbling away at this. And I can't imagine a worse period to be raising money for this trust and buying uranium. So I think that in an actual bullish environment for the equities and for the space in general, we should see that pace of purchasing actually pick up. So SPUT continues to chew away at above ground mobile inventory, and that's exactly what we want to see. There continue to be a relatively consistent demand in the spot market, which is helping to shake out some of those carry traded pounds. So far this year, they've raised 157 million. I believe that one day that they raised, what was it, north of 70, 80 million in that one day. So about half of that was raised on that one big Kazakhstan news day. But again, like I said, they've just been kind of nibbling away, chipping away. Whenever they have a little bit premium to NAV, they're right there issuing shares. They did close on Friday at a discount to NAV of 2.65%. The trust is trading down today, so no shares issued today, most likely. They now sit at 48.5 million in cash in their treasury. So all told, they are sitting on 44.3 million total pounds of U308. Remember, when they took over UPC, there was only 18 million pounds held in that fund, the Uranium Participation Corporation. So they've gone from 18 to 44.3 in less than a year. They've raised over 1.165 billion in total capital since August 17th. Turning to the ETFs, neither URA or URNM announced any change in outstanding shares on Friday. So we're still sitting at or just barely off all-time highs for the outstanding share counts for these two ETFs. I've mentioned this many times before over the past couple of weeks that we see this as a very positive sign that we haven't seen outflows of significance. In fact, we've seen inflows into the ETFs during this correction period over the past couple of months. So that's a really good sign in our opinion. Let's see. The combined AUMs of the two ETFs now sits at 1.79 billion. That's still quite a ways down from the November highs of about 800 million. Of course, that's all in portfolio depreciation, not in outstanding share count change. In fact, the all-time highs in outstanding share count from November were right about at that level. Very interesting. Today's sector actions mostly green, with the URA balance complete today. So let's talk about that in the mailbag in just one moment. But before we do, let's take a look at the charts. Starting off with URA, up today over 2%, 2.15% on the day. Pretty low volume. Either way, it's nice to see the sector seem to kind of stabilize here for a moment, although I'm not holding my breath because we have that Cameco conference call, which can sometimes create some volatility in the markets in either direction. Either way, this is nice to see URA rising above that trend line, and now we have this bearish cross about to happen, although the 200-day is moving up. Now, this bearish cross carries much more weight when the 200-day is moving down. So we are likely to have this cross happen even if it reverses relatively quickly, if we continue to see this sideways or slightly upward action in this ETF. Volumes are low, like I mentioned. MACD, we're seeing a bullish crossover here. RSI finally moving up and getting up off the mat. Overall, looking positive, like a recovery is underway, at least the beginning of one. Of course, we need to see this follow through over the next few weeks, and we'll see if we get that. Sprott Physical Uranium Trust was trading down a bit more, a little bit of dip buying going on in the last half an hour of trading today. Still down almost 0.3% here. Negligible volume in the trust, especially in comparison to the record volume we saw on Friday. And of course, that was largely facilitated by the last bit of buying URA had been doing to establish their position in SPUT. Cameco hanging on, similar looking chart as URA, although of course we've lost the 200-day, but it fell from a lower, you fell out of the first floor instead of the second floor, down not quite as much since the November highs as the ETFs, but either way, really would like to see this move up and recapture that 200-day moving average, which is still rising significantly, actually. Now we're actually seeing a bullish cross on the MACD. That's a good sign. RSI moving up. Looking like a recovery is being worked on here for most of the stocks in the space. So for the mailbag section, I'm actually going to just address the situation with the URA rebalance. So basically, SPUT established what is now a 6.27% holding allocation in, URA established a 6.2% allocation in SPUT. This is about what we were expecting. Somewhere around 7% is what we had expected, and it's just come in slightly under that. Of course, this created a lot of churn in the sector, a lot of selling that they had to do. in order to establish that position. We knew that going in. There probably was some significant front running selling prior to the URA selling, only to be repositioned. So I'm sure that we saw that happen in January a bit, which added to the weakness leading up to the rebalance. But to give you an idea of the type of selling that happened by URA, they sold 12 million shares of Denison, 38 million shares of Paladin, 11 million shares of Bannerman, 15 million shares of Lotus, and it goes on and on and on and on. So a lot of these smaller caps got whacked pretty good from this rebalance, although much of the selling, like I said, seemed to happen to be front running. And a lot of those front running traders likely were purchasing the shares that URA was selling. So, the selling combined with an already weak sector, just further contributed to the selling pressure. Now that this is over and largely behind us, we now await this conference call on Wednesday. So I'm actually, it makes sense that I'm not going to be in the office tomorrow because there's not really much to say between now and Wednesday. We'll have to do an interpretation of that, and I will do so on Friday in the next podcast. Until then, we expect probably a bit of volatility around the conference call. But if they don't really say anything that's all that bearish or bullish, we might just continue in this sideways chop, slight recovery pattern for the short term. Either way, thank you for listening. I do appreciate you being here. If you do enjoy this content, please like this video, share it around, subscribe to the channel, hit the notification bell, and you will be notified whenever we do a new episode, which is just about every day. Thank you again, and have a great day. We will see you guys on Friday. Cheers.